Okay, guys, welcome. Today we're going to talk about taking control of your finances. So we'll talk about some strategies that you can use to take control of your finances, and we'll also talk about how to do things like making and adjusting a budget. Okay, so we'll start off with a couple of keys to controlling your finances, and the first one is to know your bank balance. Right, this will help you avoid having a bounced check if you're using a check to make a payment, or if you're using a debit card, you can avoid getting your card declined. Right. Um, Another thing is to know what you're spending. Right. So you want to keep track of all your debit and credit card spending, and you should never be surprised by checking your balance or checking your debit or credit card purchases. That should never come as a surprise. You should always sort of know and keep track of what you're spending, right? And the next thing is to not buy on impulse, right? So you want to first, make sure that every purchase that you're making makes sense for you and it's serving some purpose, right? And then, of course, we can close out these sort of keys to say that you can make a budget and then don't go over that budget, right? So those are some keys. Now, in the first example, we're going to see that what might seem like a small indulgence can actually turn out to be fairly expensive in the long run, right? So in this first example, we're told that Calvin isn't rich, but he gets by, and he loves sitting down for a latte at the college coffee shop. So with tax and tip, he usually spends $5 on his large latte. So he gets at least one a day on average, and in about every 3 days, he has a second one. All right, so he figures it's not such a big indulgence, but let's see if it is. So of course we know that there's 365 days in a year. And we're taking at least one on each day. So there's 365. And then we know that every 3 days, so every 3 days, he'll get a second one. Right, so on every third day, or if we do 365 divided by 3, we could say this is about 121. We'll even round down. So we're buying 121 extra ones. Right, so based on these numbers, we're purchasing 365 plus 121, which is 486 per year. Now, of course, if we multiply that by 5, right, we're going to get the cost of this for the entire year. So if we do that, 486 times 5, we're finding that we're spending almost $2,500 on this small indulgence, right? And small, of course, in air quotes, right? So this is the yearly spending just on lattes. So you can quickly see how something like this adds up, right? Okay, now let's look at another example. So Cassidy has recently begun keeping her spending under better control, but she can't fully pay off her credit card. This is another major problem. Now she maintains an average monthly balance of around $1,100, and her card charges a 24% annual interest rate, which it bills at a rate of 2% per month. We want to know how much is she spending just on the interest, right? Now this is a common problem because a 24% annual interest rate for a credit card is not out of the question, right? So if you're maintaining a monthly balance of $1,100 and we're getting billed each month at 2% of that, well, then how much money are we having to pay off just in this interest? Well, what's 2% of 1,100? Well, I need to do 0.02 times 1,100. And that should give me, let's see, so if that should give me a 22, I believe, but let's just check. Times 0.02. Yeah, so we get a 22. Right, so we're spending $22 a month just on interest, right? So that's going to show you that you're sort of throwing away this money in effect, rather than if you were to pay off this entire thing, then you wouldn't have to pay that extra $22 per month in addition to trying to pay the balance down. Okay. So oftentimes it's easier to manage your finances by developing a budget. So we'll look at some things where we can basically look at the steps that are required to form a budget. Right. So the first thing is you want to list all your monthly income, right? So what you can do for things that you maybe receive weekly or maybe not every month is you just turn that into a monthly average amount, right? So for example, if you get a once per year payment, maybe like a scholarship or something, you would average that out in monthly payments, right? And then of course you do the same thing, but now you do that with your expenses, right? You do the same thing, for things that don't reoccur monthly, you would just sort of prorate that to an average amount, right? And then of course you subtract the total expenses from the total income, and this determines your monthly net cash flow, right? Which of course you want to be positive. And then of course you make adjustments as needed at that point. You figure out if you need to make cuts, what things are able to be cut, and things like that. Right. Now, the hardest part of making a budget is determining exactly how much you spend, because a lot of times you might have sort of an idea in your head of how much you're spending, but until you actually, write everything down, um, sometimes you're sort of taken aback by how much you actually are spending, right? And it's sort of a little bit of a surprise, right? So one thing that you can do is to write down everything that you spend money on for 1 month, and that'll sort of give you a better idea, right? So let's look at an example. So in addition to your monthly expenses, you have the following college expenses that you pay twice a year. You have $3,500 for your tuition each semester, and $750 in student fees for each semester, and $800 for textbooks each semester. So we want to know, how should we handle these expenses in computing your monthly budget? Well, first let's figure out what are each of these per year. Per year. So for example, if you have $3,500 for tuition for each semester, of course there's 2 semesters in a year, so we would need to multiply that by 2. That would give us $7,000 per year. Right, and then similarly for student fees, we have $750. Right, so of course multiply that again by 2, and that would give us $1,500 per year. Right, and then $800 in books for each semester. Multiply that by 2, and we get $1,600 per year. Well, now that we have each of these for year, now we just divide the yearly cost by 12. Right, so for tuition, we would take our $7,000 per year and divide that by 12. So if we do that, if we do 7,000 divided by 12, we get that this is about 583.33 per month. Right, and then for the 1,500 per year, which is, I think that was a student fee, we would take 1,500 and divide that by 12, and that should give us 125. Yep, 125 per month. And then finally, if we do our textbooks, which is 1,600 per year, and divide that by 12, that should give us 150. Or sorry, not 150, 133 per month. All right, so that's how we would incorporate those non-monthly costs into a budget by turning them into a monthly cost. Okay, so now we're going to find an entire budget from top to bottom. All right, so Brianna is creating a budget and then starts listing the expenses. So let's look at some of our expenses. Right, so we have the following that are monthly. We have 700 for rent. We have gas that is 120. We have health insurance, which is 140. We have 75 for car insurance, 25 for renter's insurance. We have 110 for a cell phone, 100 for utilities, let's see, 300 for groceries, and 250 for entertainment. All right, so those are our monthly expenses. Okay, now in addition, over the entire year, she spends about $12,000 for college expenses. So if we have $12,000 for the year, we could say that on average, $1,000 monthly. Right, so that's where this 12,000, since that's for the entire year, we would divide that by 12. Right, and then we also have $1,000 on gifts for family and friends. We'll say gifts is 1,000 divided by 12, which we'll put here in a second. 1,500 for vacations. So we need to divide that by 12. Okay, 800 for clothes. Which we will also, of course, divide by 12. And 600 in gifts for charity. So again, also need to divide that by 12. Okay, now we get for our income, we can now start to do that. We have a monthly after-tax paycheck of $1,600 per month. This is just, I will say, paycheck. And then we have a $3,000 scholarship that we'll need to divide by 12. All right, so let's figure out what some of these monthly costs were. And then we can look to add these totals. So if I do 1,000 divided by 12, this would give me an 83.33. 1,500 divided by 12, that would give us 125. And then 800 divided by 12 would give me a 66.67. And then 600 divided by 12 would just give me 50. So now we can total all of these, right? So if we add 700 plus 120 plus 140 plus 75 plus 25 plus 110 plus 100 plus 300 plus 250 plus 1,000 plus 83.33 plus 125 plus 66.67 plus 50, we get that our monthly expenses are 3,145. Okay, now if we look at our income, right, we have our paycheck, which is 1,600, and then a scholarship that's 3,000 that we need to divide by 12, which gives us 250. So it looks like our monthly income is 1,850. Right, now to get the cash flow, we have to subtract these. All right, so we take the income minus the expenses. And it looks like we're going to be in trouble here because it looks like our income is 1,850, whereas our expenses are 3,145. Right, and if we subtract these two, we'll find that this is a negative 1,295. Right, so now, of course, what does this mean? This means that we now need to go back and we need to look at some of our expenses and see if there's a way to cut any of those down. For example, these vacations would likely have to go. Gifts would have to go, or at least be trimmed down, and, things like that. Right, so this, of course, would be a negative cash flow. Okay. So let's look at another example. So you've worked up a budget and you find that you have $1,500 per month available for all your personal expenses combined. Now, according to spending averages, they say that you should pay about 1/3 of your income on rent, right? So if we take our $1,500 a month, we multiply that by 33% or 0.33, we'll find that this is about $500. Right, so if we stick to this 33%, that means that $500 could be allocated towards rent. Could be for rent. All right, so that's an example related to sort of that budget. Okay, now we're going to look at another interesting example that sort of weighs the pros and cons of looking at purchasing a new car. All right, so Jorge commutes both to his job and the school, and he drives about a total of 250 miles per week. All right, now his current car is fully paid off, but it's getting old, right? So for this current car, he's paying $1,800 a year on repairs, and he's only getting 18 miles per gallon. Now he's thinking about paying for a new hybrid car that would cost $25,000, but it gets 54 miles to the gallon and should be maintenance free aside from the oil changes over the next 5 years, right? Which is the time that we would pay this off. Now, should he do it? Assume that the gas costs $3 per gallon. Now, just for the sake of argument, we're going to assume that we're not paying interest on this. No interest yet, which of course is not true. Of course, you're going to be making interest payments when you purchase a new car. But for this example, we'll just showcase that even with no interest, it's not quite as good as it seems to invest in this new car. Right, now let's take a look at the current car. Now, if we're driving 250 miles per week, and his current car gets 18 miles a gallon, then we need to take 250 miles. And if we multiply that by 1 gallon over 18 miles, this will tell us how many gallons per week of gas that we need, right? Because now our miles cancel out and we will end up with gallons. So I need to do 250 divided by 18, and that tells me that we need 13.89 gallons per week. Right, now if gas is $3 per gallon, then that's going to tell us that we're spending about $41.67 on gas per week. right? So that'll be one of the things that we're going to put in our budget, right? And then of course, the other part that we would need to put for the current car is $1,800 per year. And if we divide that by 12, then that would give us that we're paying about $150 per month. So the current car costs us $150 per month. And then in addition to this gas, we'll multiply by 4 to get the cost for the month. So $41.67 times 4 would of course get us $166.68 per month. Right? So the old car, if I add these two together, would cost me $316.68 per month. Okay, so that's the cost of the old car. Now for the new car, let's first take this payment, which is usually over 5 years. So we're going to say this is $25,000, and then over 5 years would of course be $5,000 per month, or sorry, per year. And if I divide that by 12, then we're getting $416.67, right, per month. Then we also need to incorporate how much we're spending on gas, right? So we're driving 250 miles per week. And again, similar to the last one, I would need to multiply by 1 gallon for 54 miles. Okay, so if I do 250 divided by 54, we get that now we only need 4.63 gallons per week. And if we multiply that by 3, we're finding that we're only spending $13.89 on gas per week. Right, which if we multiply by 4, would give us 55.56 per month. All right, so it looks like our monthly expenses for the new car would be the 55.56 in gas plus the 416.67 in the car payment. Right, so if we add these two, 55.56 plus 416.67, that would give us that we're spending $472.23 per month for the new car. And that was without interest, right? So with interest, this would actually be much, much more than this, right? So even without interest, the old car is still the cheaper option, right? Even though you're spending all this money on repairs. Now, of course, in the real world, you'd have to weigh, well, how many years left does this car have in it? Is there a major repair on the horizon that would be more than $1,800, which is usually likely true, right? So it's usually a little bit more complicated than this, but this sort of still shows the idea. Okay, I think this is, okay, so now it looks like we got 2 more examples. So in example 7, we have that the average median salary for a full-time worker age 25 or older who is a college graduate with a bachelor's degree is $64,127 per year, right? While the average person with only a high school diploma only earns $36,318 per year. So we want to see how much more does a college graduate earn over a typical 40-year career. Well, for the college graduate, I would need to take my 64,127 and multiply that by 40 to get the earnings for that 40-year career. So we do 64,127 times 40, we're going to get 2,565,080. Right, now just for the high school grad, we need to take the 36,318 and multiply that by 40. So if I do my 36,318 times 40, this would only give me 1,452,720. Right, so of course to find the difference, we'll subtract them. So do my 2,565,080, and then minus the 1,452,720. And we get that the college grad will earn over, so we get 1,112,360. So this is how much more the college grad earns, over $1 million more than just the high school grad. Right. So now, of course, you also have to weigh how much you're spending on college tuition, but usually it's, of course, not going to be more than $1 million, right? Okay. So now, finally, last example, we have that across all institutions, the average cost of a three-credit college class is approximately $1,500. Now, suppose that between class time, commute time, and study time, the average class requires about 10 hours per week of your time. Now, assuming that you could have had a job paying $10 per hour, what is the net cost of the class compared to working? All right, now we'll talk about, is it a worthwhile expense? And we'll assume that there are 15 weeks in the college semester, right? So the cost of the class is $1,500, right? And of course, you're spending 10 hours per week for 15 weeks for a total of 150 hours. Okay, so of course, and you're spending this $1,500. Now you could have had, if you worked a part-time job instead, that pays $10 per hour, if you would have spent that 150 hours working, then you would have made $1,500, right? Because you're doing 10 times 150 there. So you could have made $1,500 in that time. Now, of course, if you look at the net, you would do 1,500, which is what you could have made. And then, of course, you subtract. No, I want to do this the other way. So I want to take the cost, which is actually negative 1,500, and minus the 1,500 that you could have made. So this would actually give you a negative $3,000. So if you take the class, you're missing out on $3,000 because you have to pay the $1,500 to take the class, and you also could have used that time to make $1,500, right? So it's a net loss up front to take the class. Now, of course, is it a worthwhile expense? Well, we just saw in the previous example that college graduates earn over $1 million more according to this data here than just a high school grad. So if this is working towards a degree, then we might say it's a worthwhile expense. Right, so that's sort of what we're looking at there. Okay, so that concludes this video on taking control of your finances. I hope you enjoyed, and I will see you next time.